is how fiber changed my life.
I'm just going to wait for a few minutes before I start. How's it going? Good, thank you. I'm going to go through a whole lot of things and give you the understanding of what the market is doing. But give us a few minutes for people to join, and then we'll start. Okay. G'day from Melbourne, Australia. Currently the time is 4:30, so it's probably odd times for other people around the planet. And for those who have spare time, well, thanks for joining us. And what I'm going to do is, like I put on the description, I'm going to look at the macro picture and give a number of reasons as to what the price action has taken place and why the main pivot points, and the mystery question is what's happening in the near future, and potentially what we'll look at from the upside as well as the downside. So we need to look at two situations where we either bearish or bullish, and what we need to look for from the other markets to I suppose explain the justification. So currently, if we look at Bitcoin, you can see it's on a ranging. So this is the weekly chart, and we can see we're going sideways, and people could be bullish or bearish, and they're both justified in terms of this range. But however, you would know that if we drop this level here on the 28,000, it's pretty much a bear market, and if we pass this 382 level, which is right 52, then we are likely to continue on to try to get a new high, all-time high. So they are the constraints, and what's stopping us is pretty much the broader market. So let's have a look at the SP 500 first of all. Let's see how historically that was relevant to our Bitcoin pricing, and let's talk about the potential for the markets. So right now, if we look at the monthly on the SP 500, and if I do this, just give us a sec. Give me a sec here. I'll get some rid of some of the lines. So this was a major trend line on the monthly, and so bear with me while I explain the SP 500 and what we can potentially look for the play. So from pivot points along here, we have this massive trend line. So that's justified, and then we also have the, let's see, this one here. This is the white one is the weekly 20 moving average. So that one's a 20 weekly moving average. Used to be support along the way. So historically, and once it's broken, we go sideways or pull back deeper. And currently, we are below the 20 weekly moving average. And if we look at the 20 monthly moving average, this green one, that is pretty much the bull market. So if we drop below that, then we can expect something really deep. So this green line is a 21 monthly moving average, and that is pretty much the macro uptrend. And then if we look at the other two, which is the weekly, we've got the 50, that's acting as support right now. We drop below it, and we've got the other 50, which is the MA. So we can see how these are relevant, and if you put a Fibonacci into it, from top to bottom, you can see the 0.302 was support, and if you add that trend line that we had, the other one, you can see confluence, and therefore we had a good bounce. So right now we're going sideways with the general market, and potentially we can have a deeper pullback. So if we go to the weekly on this chart, and I'll just bring out these lines that were the monthly. Give me a sec. Add that in. You can see how they are playing their role. I don't want that. If I was to get rid of one and the other, so if we add this extension, you can see it hit the Fibonacci level as well as this trend line, and therefore we had a nice bounce. And you can see from a weekly perspective, we kept coming down and we found good support, powerful week or two. Now we can see that level is pretty much resistance, and you can see that Fibonacci is also holding support. So if we were to lose this, it is most likely that we'll come back down to visit this, and that will mean for Bitcoin pretty much a drop in that channel that I'll be talking about. So as long as this find this stays above this level, Bitcoin has a chance to continue up. The moment we drop this level, we have a correlation, and therefore we'll come back down to this level, and there's a fair bit of a drop, and then we'll see what happens. But it is not bullish. So if that was the case, if I was to do this, if this is A, B, and C, that was the mild correction. However, if we were to lose this level, then we can potentially have A, B, and C, and then potentially bullish. So that's one scenario. And the worst one is we have our A, our B, and would potentially come down deeper with a bear market, or potentially, and we don't know how far it could go, but that will be the next strong support level, and potentially if it is a bear market, we'll probably even come down lower. Not to say it's going to happen very quick, but that's the scenario. We've got a whole bunch of scenarios that can take place with our ABC correction. So the context of that is the background. And if you look at here, when we did all-time high, December, and then we did March. So if we look at Bitcoin in December or November, it pretty much correlates to the SP 500, and pretty much here as well. So relatively close the way it's going. So the relationship between the SP 500, which is one of many, so the question was asked online. The SP 500 is the broader, bigger market, and we also have the NASDAQ. So let me just pull that chart out. Give me a sec. But what you need to understand is that Bitcoin on its own is not enough, because the bigger markets, the people with the big money, will move their money around from one market to the other. So here we got the NASDAQ. The NASDAQ is pretty much aligned with cryptocurrency, which is technology. And here we have the SP 500. And if I was to just do that, can't do that, right? Annoying. Give me a sec, guys. Okay, and this is the US dollar. So the idea is, if the Bitcoin, if the US dollar goes up, it's likely people are moving away from the stocks and putting their money into US dollars, and that's why the US dollar demand is going up right now, and that's a 4-hour chart. So the US dollar is pretty much taking up a lot of that, and you can see the momentum is still going up. So we'll might match the all-time high in demand for the US dollar. as stocks are sold off, they're only going to go into currency, and that's where the US dollar goes up in value. And similarly, when the US dollar drops in value, it's because the money is being pushed to some stocks. So it's a matter of going to safety. Excuse me for a sec. So that's the general purpose of from stocks to US dollar. It's moving from one to the other to maximize or compound your profits. Here I have on the bottom right, we have the USD or Tether dominance, and this has also a correlation, and we are going sideways as well. Historically, when US dollar or Tether dominance was very low, it was Bitcoin almost at its top, and when US dominance goes up, or Tether goes up in dominance, it's usually because people are selling the crypto into Tether. So that is the correlation, just to sum it up. So now going back to the Bitcoin chart, if you understand Elliott wave theory, which is pretty much you need to understand the basics, we have impulse of 5 waves, and this is pretty much what seems to be, for this cycle, the top. So we did that, and if you follow my reasoning from many streams, if we do that, you will see that it's the golden ratio. So I'll do the reverse. I'll put that there. That's the golden ratio. And so the golden ratio is a 1.618 or 618. And you can see that was the main resistance there. And we overperformed the next time around, which is fine. That's why we got the wave 3 to 4. And we just from wave 3 to 4, we got the 1.212 extension. And that was it. And then the major pullback. So that seems to be, that's it for the market. For this to become very bullish and to create new all-time highs, we need to have the SP 500 do the same. Is pretty much to go up and break its all-time high as well. So at the moment, as long as it's hold this level, so this is a key requirement for SP 500 to hold this level. If it does hold its level, and if I just get rid of that for a sec, then we can see the potential to go up more. At the moment, what we had in place was a nice descending wedge. So give me a sec. So that played out. That was a nice, where is it? Here we go. That was a nice wedge formation, and that played out. And if we can go to the daily, it's pretty much more clearer. There you go. So we had a breakout from that. Now we want to see this hold. There is a good chance that this could continue on. And if I was to look at that, I can use the Fibonacci extension. And the 618 will be the first resistance right here. That'll be the first resistance, which makes sense along that key area. That's going to be potentially the major resistance. If the markets continue on, then that will be the next level that I'll be looking at. And the markets are still strong, then we can look at those levels there. So that's going to take a while. As long as the markets are strong, great. As long as it's above this level, fantastic. And we might go sideways, and that might just give enough Bitcoin to do some new highs. Not all-time highs, but new highs. For us to go to all-time high for Bitcoin, we need to break this level here. So there is a correlation. Yes, there is definitely. And that's what I'm trying to explain. So going back to our chart, what are we looking at? And I'll explain it to you. So this is how we got the top, and I'll explain a few things that will make sense to you, and hopefully I do in the right order. So let's close that. Here we have the 0 extension. So this is a fib extension from the bottom to the high. Now if you look at the weekly, you can see this fib level is very confluent with the weekly level of resistance and support. Correct? And then you see the next Fibonacci level, very confluent with resistance. And then we have the 0.5, which acted as resistance on the way down. And we have the 0.618, which was the top. So if you did this, you would know that this was going to be a very strong resistance. We're going to get a pushback, and that pushback was very strong. So the 618 golden ratio is the golden ratio. If you don't know it, look it up. It's always on the charts, and it's always a place where it takes profit. This candlestick, weekly candlestick, pretty much said that's it, we're done. And the fact that it closed below this fib level, and then this fib level became resistance because it should have been support. The fact that we dropped below it, pushed the price further down to this fib level, it's perfect. This fib level or fib extension is perfectly explaining what's taken place. Now that was on the way up, and on the way down, that was explaining these key pivot points. Now let's just hide that for a sec. Now if I get another chart in a similar fashion, if I was to do a fib extension from the bottom to the top to the bottom, you can see it's hit the 1.272. Again, perfect. And if we move that across, you can see the 0.382 acted as resistance. And now we're on this level, showing support, which is very much aligned with this point there. So this is going to be very important to hold this level on the weekly. The moment we close the weekly below this, expect it to come down to this level. And we'll get to that. And this fib is also explaining, that's the historical part, so I'll leave that out. Now, let's see what have I got here. Okay, not that one. Okay, so here I have. I've preset this, and if I put this in, fib extension from the swing high to the swing low, swing high, we have these fib levels. And if I was just to adjust this slightly a bit, you can see they hit perfect extension of 1. That was the bottom. Perfect spot. And the fib extension on 1, if you're a trader, you will know what that means. And then you got these other ones further down. So if we were to go bearish, and if we were to lose this, this will be the targets further down, along the way down. If that makes sense. So that's from a bearish perspective. If we were to come down, that will act resistance, and we will be going down that way. And we can talk about the bearish scenario all the way through, but I'm not going to do that. I have some in mind, and I will talk about it when the time comes. For now, what I want to do is, that's what we have. So what we have, let's see, not that one, right. So what we have is a wave of 3. So what the market has done, we had from the COVID scenario, we had a massive bull run, and we found a resistance there. So that's wave 1, a big wave. Then we had our correction, and we had our second wave. What are we doing? We're doing our third wave. The third wave is going to be weaker. So if you understand about waves, or the 3 waves, and then you can say it's like an ascending wedge, right? So that, in a way, you can say that could be potentially, a channel, and could drop. And we're going to look at whereabouts this could be. Again, it really depends on the Fibonacci. So if we were to take the logs off and just clear these up, give a sec. This is when the log settings are off. You can see it's significant. But anyway, let's talk about the targets and what we're looking for. Right now, this is a good sign. What we want to see is the weekly close above this Fibonacci level. And that will be confirmation to me that we're going to try to hit something new. So at the moment, we have this ABC correction. Based on this, 1, 2, 3, we're having a correction, and we can also have this correction, this impulse. So if this is not the local high, the next high is this here, where C is, and I'm looking at 52,000. And it's going to be a strong resistance, as you can see. Historically, this has been strong resistance. So if we are fortunate to go up, it's also probably going to be aligned with this trend line, and then a reversal. So be careful, and depending on what we see on the daily, it's probably your if the candlesticks pretty much show a reversal, this is your last exit point, if this was the case. If we were to break above this line and then hold, we have a slight chance to go further up to the next target, which is 59,000. Do I feel like we're going to go above that? No, I don't. So we've got 2 points with the assumption that this is going to continue to go above, but there's a criteria. It needs to break this level here first, and then it needs to break this level here. So when we're talking about these targets, we have prerequisites, which are very hard at the moment to pass based on what we see. And like I said, this is the condition that this continues to go up. With that condition, we have here the targets. And so let me just get rid of that. So it's pretty clear. If we're to continue to be bullish, then we can have our ABC there as well. So we have a Fibonacci extension towards the downside, as well as Fibonacci extension to the upside. Okay, so let me see, where is my, not that one. I'm going to try and get my fib levels. Not that one. I had it somewhere. I'm going to change colors on that one just to make sure I know where I'm looking at. Okay, I'll make it in red. So here we have not sure where that came from. Okay, that doesn't make sense. So let's go to the daily just to get a clearer shot. So now, local thing, from here to there, you can see it's hit the fib extension of 1, which was the resistance. So now we are seeing that the local Fibonacci levels are playing their role. Make that a bit, might be a bit too dark for you guys, and maybe even increase the browser so you can see it. Give me a sec. I'll just increase the size so you can see the numbers. Someone should remind me of that. So the fib extension. So we had the bottom here from swing low to swing high and back down to the bottom. You can see the Fibonacci extension of 1, and that was a major rejection based on this impulse. And you can see how it's actually not a bad drop. It's not a straight drop. So, and what we can see from these two, from this close up, you can see that's a reversal double top. Got a double top there. That kind of formation is a bearish sign. And similarly, we had a double top. So we had 1, 2, and down. So those are clear reversal patterns. So now we are looking for a double bottom, which what it looks like is a double bottom on a small time frame. And until we actually break, what number do I have? This level here. Until we, I would say as soon as we break that level, then you can become a bit bullish for seeing more highs. If you bought the dip, great. And I do believe we're going to go higher. And when we look at this, we see a few micro level of resistance along the way. So this is a significant level, which is 618. So that's where I'm going to see a bit of major resistance. So we can go there, and then we could potentially come back down. If that's the case, that's pretty bearish. What we want to see is break above and then move up, and that's where we're going to see this level here as a major resistance. And this could be our exit plan. And you can see this structure is not a continuation at the, I thought it might be a continuation pattern, but this rejection basically confirmed that it's not a continuation pattern at the moment. It could potentially be, a continuation or reversal, to the upside. This could be a big bear trap or bear flag and then continue down. The question is, in many cases, you can also have it pop up out of the formation and back down again. So this T1 is, to me, very critical, and it could be the last exit point for this year before we go further down. And if the SP 500 complies, that's a bullish market, great. Then we can look at the other targets. So come and join my channel, and I would pretty much communicate if I think it's a reversal or not. But let's get there first. There's a long way to go. So that is the current situation. This 44,000 is the major resistance level. This band here. If we could get above that decisively, if we come like this, and well, that's pretty much going to be pretty much left shoulder, head, right shoulder, and we potentially could go down further from that point onwards. And once we go down below this, we've got this line here that could potentially play, but still, we don't want to see that this line is becoming significantly important at the moment. And so if we do break up to the upside, this will be and if you didn't take profit at any point up, this will be a last scenario where you could exit if it drops below this, because that will confirm that this is a bear flag for the downside. So we're looking at that from a number of angles, right? So this is currently confirmed, and it could continue to go down. So looking at the bearish scenario, if we look at from the bearish scenario, let me just get that out the way, clean this up a bit. Then what do we have? Bearish market. Okay. This is the assumption that this wave is complete and we are going to the bear market. Just pretty much like if this was to lose this level and continue down, it's going to be a hard one. It could be a fake out, for instance. So this could probably go down and you have this fake out. It's going to be a difficult stage to trade. However, it is more likely once it's broken below that this will continue down. This is the SP 500 and get tested these levels. Okay, so that formation looks bearish, but we can still go that way. And if we lose this level, that to me that is confirmation that we're going to go in for deeper correction, and that correlates to Bitcoin. So if we are to lose this trend line, then we have levels to play with. So if we were to lose this, then we find a bit of a bounce there potentially, but I think that people will go into panic mode, and I don't think there will be any stopping there. I think they will just sell out, big shorts, and we might find some support here on the 1.272, and then we have this potential. If that's the case, we might have a reversal pattern of some sort. And so let's simulate that. If we were to break that, that will be wrong color. Great. Give me a sec, guys. I could pink that one there, all right? So just playing the role. That will be if it's gone bearish, that's our A. That could be our B, C, D. Actually, wrong way. Sorry. So that is our A. That is our B. That is our C, D, and E. And then we can go up to this level here and potentially find that as a resistance. And that will be a downtrend on a macro, and therefore we'll continue on to the bear market. I don't see, if we were to drop this level, we'll not even get above it. But who knows? We might just stay there and go that way, all the way down. But we're just looking from an A, B, C correction perspective. Now, there is a lot of scenarios that we were just going through. So that is a potential scenario, which is not valid yet. We've got to validate that after we drop this level here, the 32K. Once we drop the 32K, then that's probably likely to play out. Now, here's a thing that I've thought of in the past, and I'll just show you what I'm thinking. From a RSI perspective, interesting. Let's look at another chart. BTC USD. Yeah, this looks a bit different because I've enlarged the screen. Okay. So I looked at the RSI as well, and this is let's get the weekly out. I think this is a bit too big. Squeeze that up a bit. Bear with me, guys. So you can see from RSI perspective, we have this trend line. And to be bullish, we need to break this trend line. It could be that one, or it could be that one there. And historically, the bear market really, RSI really comes down low. Bear market. This is the weekly, and you can see that we're nowhere near. So if a bear market happens, we've got to look for the bottom. Capitulation before we can go up. What this RSI is showing us at the moment is that this line is holding it on the weekly. This yellow line. So if we were to drop this yellow line, it's going to be a bear market, potentially. So when I talked about losing this level, it's probably going to, it's actually not enough to go down, but it does show you that, I'll do this. Okay. So you can see historically when this was a bull market, when we broke this level, that trend line, you can see how we went to the bull market. Similarly, when this line was broken here, we went back up again. So the RSI helps us. Right now, this red line, the moving average, is acting as support. If we drop below this, we're going to have a deeper correction to this yellow line, and potentially that way or that way down. So the RSI is going to help us also to find the bottom, also when to become bullish. To become really bullish on this, we need to break that level. We need to break this trend line, this blue one. And that correlates to pretty much this line here. We need to break that. And then you can become pretty bullish as well from that perspective. And you can see the Fibonacci level. So if this goes sideways and continues to sideways, we're going to get a squeeze. And I hope it doesn't come down to it, but if it does, a big move is going to come. Everyone's talking about the big move. So if this continues sideways, it's going to be a big move that way or a big move that way. And I'll bet you that's going to happen. Pretty confident that that's what's going to happen. Bitcoin has a tendency to put everything on the edge of a knife and do that. So that's from a big picture perspective. If you've got any questions, let me know. But that's pretty much wraps it up. That's what I wanted to communicate with the big picture and the short term. I've pretty much covered it. Looking at the 4 hour, we want to see it break this flat level here for the time being. That is pretty much, until we break that, don't be bullish. We have this line as well. So we've got two levels. We want to see these two broken before you can become bullish and go long. Until that happens, I would say neutral. That does look like a reversal pattern, accumulation pattern. And when we look at the fear factor for the general market, is 39, which is low. Not too low. It's not extreme. And cryptocurrency is 27. Slightly because of the bounce, we had a better increase in the number, but you can see extreme fear was last week at 20. And historically at these levels, right at real 13 level and so on, that's where we have our bounces. So far we haven't come down that low. That's also not necessarily a good time to enter as well, but generally in a bull market it is. But because we've pretty much finishing off with the big moves, with the waves, these could be the early beginnings of a bear market. So I'm going to wrap it up like that, and join our channel. And if you've got questions, I can continue to answer them in the Discord. You can join for free or trial basis. The Telegram channel has a bot, and you've got 10 days free time or trial period to join in as well. So I think